Our next session is a panel discussion which highlights the transformative role of account aggregators in the financial sector, focusing on the innovations and strategies emerging within the ecosystem. We'll discuss the myriad opportunities, applications, and initiatives driven by account aggregators, showcasing how they serve as a foundation for new business models and innovations that promise to reshape the landscapes of financial services. For the panel, we would like to call on stage Aadya Misra, Counsel, Spice Route Legal, Satyam Kumar, CEO and co-founder LoanTap, Mr. Swaroop, Associate Vice President, Products, Perfios. Abhishek Varshney will be our moderator, who's the lead partnership, 𝐂𝐻𝐿𝐵𝐻. Ladies and gentlemen, let's welcome them on stage, please.
So welcome guests and welcome panelists. I think nearer to the end, it is very difficult and big responsibility for us as a panelist that we ensure that you are well engaged. So to start with, I think since we see a lot of many seats are vacant, but I just want to check a dipstick check. How many of you have experienced account aggregator or have a account aggregator handle?
Quite a few.
Quite a few. I think this dipstick check 1 year back would be, we would have a different scenario together. So to continue on, like we see many of them are still not on AA. So Satyam and Swaroop, what do you think, what do you suggest that how can we get all the people on account aggregator? And also one of the nuances which I've always heard that account aggregator is lending, right? But the account aggregators, many use cases are across capital market insurances. What are your thoughts on that?
Yeah, so I guess right now most of the account aggregator use cases are very specific to a particular situation, like trying to create a wealth wealth recommendation engine, trying to create a loan underwriting engine, or creating a underwriting score on individual customers. I think this is a slow process. It will, because it's institution driven, each of the institution has to adopt to it, and there's too many uniqueness which has to build in here. So institution has to adopt, the customer's account needs to be there with the bank where the account aggregator is, and many of the TSP has to talk to each other to get it right. What has not, despite of all these hassles, what we have seen in last 1 year, the number of account aggregator pools has actually grown by 10x. That's, month on month, if you look at between last March to the February number, it's almost, it's more than 10x, which is a significant growth that talks about the latent potential of the innovation which will bring into the system. Now, what could be done here very differently is wealth or overall banking engagement platforms that has a multiple use cases. Okay, so one of the firms, whether it's a LoanTap, whether it's some other institution, somebody will come up with a one universal interface which will have a robo advisory engine, which will have a lending rule engines or lending scores, which will also have a recommendations for your different mutual funds, pulling the data, pushing the data, and all kind of stuff, including your financial health guidelines. The moment one app has a multiple use case, the customer level adoption will go multifold, and that's the need of the hour. Very soon, sooner or later, we will see something like this coming up. Till that time, it's largely B2B use cases. So I, as a lender, has to pull it. I ask a customer that, hey, it's an easy interface for you to go and submit a bank statement instead of trying to pull a PDF or something like that. And a customer has to choose that as an option, and the institution which holds its bank statement has to allow it to happen. So because of being a B2B in nature, the adoption has not proliferated to all the level. Otherwise, it has something which can touch everyone's life overnight. That's the possibility.
So Satyam, I also want that since you are a CEO of a new age NBFC and early adopter of account aggregator, so we want your comment on how your implementation has helped in achieving efficiencies, and if there is any particular impact, if you can, which you can tell to the audience, because that is more relevant. People want that people who have already implemented account aggregator framework,
Sure.
what they can see.
So what it does is that it solves three things, particularly for the lender. One, which everyone is looking forward, be it a customer or anyone, what they are looking forward is speed of decisioning. बता दो कितना लोन देना है और कब देना है, I mean, rather than keeping us moving from one place to another place. So it solves for the speed. It also solves for the hassle of picking up the document. I'm not sure how many of you have taken a home loan or something like that. You have to give a specific consent letter to the bank. A bank representative go to another bank. He will pick up the bank statement on your behalf for 6 months or a 12 month. You will go and submit, and then the loan process will start. It's not that loan plus process will get completed. So there's one is a TAT, the second is a user interface, and the third is the quality of underwriting, which is also prevention of a fraud. Because the moment you leave the bank statement to move between one channel to another channel, okay, there is a chance of manipulation, and that also has a both. I mean, that has all kind of a risk. Okay, so the manipulation chance are near nil. Considering that these are the three basic parameters which any banking system does for an underwriting, and all those three things, account aggregator comes as a WAW solution. Okay, that's where we have used it. And on top of it, if you can build an AI, credit scores and all, then you get into a WAW moment. And earlier, if you will see, most of the smaller loan, I mean, most of the loans was about unsecured loans was about sub 50,000 or a sub 1 lakh rupees limit, which comes to an instant. An account aggregator actually makes, without compromising on any data, all the loans, even up to 40, 50 lakh rupees possible, because there is no other data more than the core banking data on which any banking system relies for the recency and the quality of underwriting.
So Adya, a question to you. How do you see role of account aggregator popping up from a legal angle, like life without A, with A, and how are financial institutions dealing with especially when DPDP rules are right around the corner?
So we were just having this conversation before we got on stage, which is, I think the account aggregator framework was revolutionary in terms of empowering the user or the consumer. Now, prior to this framework, data was seen as being owned by certain institutions. What the framework did was empower users to exercise control over it. They brought them into the ecosystem, they brought consumers into the conversation, gave them a degree of control, gave them the ability to exercise a right over how their data was used, for how long, etc. Right? And if you look at the other laws that existed at the time when the directions came to force, it was practically non-existent. So from that perspective, I think it's very interesting what the account aggregator framework did. Now, what this means for the DPDPA, because if you look at the new Digital Personal Data Protection Act, which was enacted last year but is not yet in force, it is expected to be implemented over this coming year. The DPDPA does the same thing that the account aggregator framework does, but across all sectors. So if you are looking at both together, I think what, as a lawyer, we'd have to do is do a harmonious reading of both laws, right? The DPDPA is going to be the overall law that kind of governs all sectors. For specific divergences, we'll be looking at the account aggregator framework. And I think both are, going forward, we will have to read both together. And I think both empower the consumer in a way that no other law in India really has done. And I'm not talking about the financial sector right now. I'm going to talk about a lot of other industries that have historically got away with, forget bad behavior in terms of data, but also the ability to claim data ownership over personal data that wasn't technically theirs to begin with. So these are interesting frameworks, consumer-forward frameworks.
So, Swaroop, my question to you, since you are from a TSP and you are there innovating use cases, because you are someone who is actually crunching the data and giving it in a usable manner. So what are the strategies you have come across, innovative strategy used by the companies in lending or across sectors?
Sure. Hi, everyone. So if I use the words account aggregator, lending, and innovation in the same sentence in the present day, maybe there'll be a few eyebrows raised because people will obviously think, okay, this has been there for a couple of years now, what's new? But I'll still start with lending because there are still a lot of things happening there. What happened so far was refining of the borrower journey all the way till disbursement. And Account Aggregator did a fantastic job of streamlining that journey. What is now happening with the same level of focus that we are seeing is exploration in terms of can Account Aggregator also help us in terms of our collections. So for example, can I build a lightweight monitoring engine which not only gives me signals but also helps me improve my collection performance. So that is a line of focus that is happening. With capital markets data coming in, loan against securities is another focus area, and very strong focus area where inbound interest is coming from the industry to us. So in short, what I'm trying to say is the lending industry continues to find new ways to add value through Account Aggregator. But going beyond lending, there are some interesting models that are coming out. If I may take a couple of examples, let me use wealth management. For those of you who know, it may be a basic kind of a short tutorial, but for those of you who don't know, it may help. In the wealth management world, there's this whole concept called portfolio modeling and portfolio rebalancing. Traditionally, it has been available to the HNI and UHNI segments. Now, for this to work well, what is needed is periodic data refresh, so that data is fresh, and on top of that, portfolio analytics is done. With Account Aggregator, this becomes easy. Before I go to Account Aggregator, what I have seen in the past wealth management stint that I had is that even the most sophisticated wealth management software has a hard time in achieving this data refresh, because we are talking about not just held within data with the institution, but also what is held away because customers have other financial relationships. Now, aggregating this data is a big challenge in the industry. What Account Aggregator has helped is not only make this simpler, but also there is a potential to automate the output of this analysis. So for example, what corrective action should be taken on the portfolio, what stock should be sold or risks should be reduced. These things can be automated even, which means the feature can be offered at scale and made available to a larger audience. And we are seeing that happen. We are actually seeing startups come out with portfolio analysis and portfolio health monitoring kind of features for the regular retail investors as well. So that is a classic example where multi-asset class and across customer segments, new offerings are coming powered by Account Aggregator, which was otherwise not possible.
Great. So one of the point which I think from a consumer point of view when I see, and is that while we are sharing the data, how internally FIUs or the regulated entities are ensuring that this is being used for the same purpose? Are there any technical guardrails which you are as a TSP, or maybe Satyam and Aadya can comment because they would be interacting with people? How do you see it happening internally that the data is protected and used for the same purpose?
You want me to start? Yeah. Sure. So, okay, first of all, I think the team Samati deserves some kudos there, because a lot of trust framework, the central token server and the registry, etc., are helping a lot. But as a TSP, where we are at currently is largely focused on customer data safety kind of an angle, where adherence to encryption standards, adherence to specifications, etc., are enforced through technology. Where we are headed, I think, is technology helping us validate adherence to DPDPA, validate adherence to the fair usage policy, and that can be done at scale. Technology will help there. I think that's where we are headed in terms of how technology can help in this direction.
Satyam, Aadya, you want to comment?
I think Aadya will definitely comment on the industry. As far as LoanTap is concerned, as a lender, we operate within the limits which has been allowed to us in terms of accessing the data and also for doing the lending product. So we do not do anything more than the lending product. So from that point of view, safe.
I'm actually glad you asked this question because there is one large question that arises that once data is shared with an FIU, the framework is very clear that you can't transfer the data further. Once the DPDPA comes into force, there is another question that arises that there's a parallel legal framework that exists. And you can see parties arguing that as long as we've complied, FIU is arguing that once we've complied with the DPDPA requirements, we can onward transfer the data. I wouldn't worry too much because I do think that what is missed in this conversation is that with the account aggregator framework, with the DPDPA, and say what you want, even with the existing IT Act and the SPDI rules, FIUs, FIPs are all subject to checks and balances. Right? There are data protection laws that exist. They have got a lot stronger. They are going to get a lot stronger. There's going to be enhanced scrutiny on these entities. So there is a question that arises about onward transfers, but my answer to that is rest assured, the law is a strong law. It really does impose checks and balances. It requires FIUs to really think very, very closely about how the data is used within the ecosystem and outside it as well. So legally, I'm confident that there is a solution that protects consumers and protects business interests as well.
That's a great thought. So I think Sarup mentioned about loan against securities. And Satyam, what's your thought on new product being developed because of AI? Because now during my discussion, I've come across, people have started talking about loan against insurance. Loan against security is a very big market in developed countries, whereas it's very small in India. So do you, as a lender, see yourself migrating to new markets and new products?
Yeah, so one of the biggest stuff that we see is that, there are two kind of data sets which is getting created in India, which will again take the market by storm. So while we talk about creating more and more collateral, data is the one part of the collateral. There are also possibilities of creating some hard collaterals. So one is the need side of the data. The need assessment side of the data will come from the healthcare needs, and that's where the whole health stack is coming up, which will give you a propensity of people or the real-time need of people in terms of accessing credit to finance. As insurance remains underpenetrated in India. I mean, data will tell you somewhere 3%, somewhere 4%, but I mean, insurance is not something which is prevalent. And at the same time, all the customers are seeded now with Jan Dhan accounts, and which comes to the lending ecosystems for a real-time assessment and real-time lending. So one side, you have a need identification which is coming for the health stack. The second side, you have a data which is available to create an unsecured programs, which is on the go on a real-time basis. And on the third side, the design of the data is coming is the whole land records are getting digitized. So, that creates a lot of secure data. Please understand, in Bombay, maybe between one lane to another lane or one building to another building, the flat prices change. That doesn't happen so much once you move 200 kilometers away from Bombay. I mean, the main value is in the land. I mean, the construction, you can just put a roughly, depending upon the nature of construction, you can put a rough assumption to it. So essentially, the land value is the one on the basis of which the lending will happen, or the lending is happening today whenever there is an affordable housing or those kind of impact lending, or even agri loans are happening. It's essentially around the land value. Now, you have a land records today. 13 states have already digitized it. So even hard collateral, you have a data to create a cash flow. And on the other third side, on a medical side, you have a data also to identify the use cases and monitor the end use. So nothing better than this can happen, both from sustainability point of view, having a money which goes to the right use cases, and having a money which is a patient money, because secured lending is a patient money, long-term lending, which you can you can repay without destabilizing your cash flow. So all three merging together, we are headed for a great time.
So talking on the same lines, like with DPDP, we'll have more consent managers across different sectors. So how do you see intersection of different consent managers, and how does this data become more valuable when you
Yeah, I
combine
guess-
health and financial
Yeah,
data or telco?
So I guess what DPDP does is that it allows you to be the owner. Right now, your data is being sold by the people who have sold you one product at some point of time. Sometime you might have ordered something, some food. Sometimes you might have ordered an insurance product or a loan product or something else. You know, all of those institutions are trying to monetize it by way of valuation, cross-sell, upsell, blah, blah, blah. And with the whole change in the Data Protection Act, it allows you to be the owner, so you can monetize. You can monetize for your own benefit, or you sell that. I mean, the authority is with you and not with the institution who sold you one product in one need.
Adya, you want to add? And maybe you can add an international perspective if it is there.
International perspective, I think it's useful to also look at Europe and the UK and look at the open banking system there, right? Far less, I would say, regulated or unlicensed almost, and you've seen great traction that has come out, great use cases, an incredible amount of innovation that has happened over there as well. From a DPDPA perspective, I see two major issues. The DPDPA creates a new class of entities called consent managers, which are pretty much the same thing as AAs, frankly speaking. The problem I see, though, is that consent managers have to be registered with an authority that is going to be set up by the board. I mean, by the government. It's going to be called the Data Protection Board of India. My concern is that we are looking at a lot of different licensing regimes. The account aggregator framework by itself also is fairly regulated, a lot of licensing requirements, and you can argue that this is necessary for the ecosystem that you're in. My only concern is that when you're looking at different use cases, you are looking at sectors beyond the financial sector. Too much licensing may not be a good thing. It's going to kill or curb innovation on some level. It creates market barriers, it restricts entry into the market. It restricts the ability to innovate at a large scale. I'm pretty sure there are going to be solutions for this, but I think when I'm just looking at the text of the law, that's one concern. I think the other concern when you're looking at different sectors is interoperability, right? And I'm sure this can be solved technically, yes. But I think when I'm looking at it legally, you are having different licensing regimes. You have the RBI, you've got different financial sectors, now you're going to have the Data Protection Board. How is it going to work practically? Are these regulators going to talk to each other? Is one entity going to have to registered with multiple regulators? These are questions that come up. To be fair, we do expect rules over the next couple of months. We do expect guidance, and I'm sure it'll be solved in good time, but these are valid questions that do arise.
I think many of these will get answered once rules are out.
I hope so.
In continuation, Adya, what do you think when we see that there are many companies that they now say that we are onboarded on account aggregator, now we are compliant with DPDP Act. There are some nuances which every FIU or company who is using this framework need to keep in mind while implementing from a legality perspective. If you can spread some.
So I think if you look at the DPDPA, the number one key takeaway is your consent requirements that the AA directions address very well. Your consent artifacts pretty much satisfy what the requirements are for the standards of consent that are prescribed by the DPDPA. But I think there is also an additional set of compliance obligations that fall on FIUs and, for that matter, FIPs as well, which is your ability to implement security safeguards on some level, to have accountability measures to your users. And I think the most interesting part of it is the kind of data subject rights that are now going to be afforded. As a consumer, you have the ability to access information, you have the ability to correct information, and most interestingly, you have the ability to seek the erasure of data. How it's practically going to play out is a different story. But the fact is that all players within the sector are now going to have to implement technical measures, compliance measures, and legal measures to make sure you can actually give effect to these data subject rights. And I don't think that's something companies have seriously thought about till date.
Great. So maybe this is the last question. We can have Satyam and Sarup can answer that, and then we can open up for the questions. So I see two types of entities in the current regime. One, some companies who are all out that they're bullish about account aggregator, and they have expanded the use case for across all the products in their company, whatever possible. And they're accepting this framework with some of the issues which currently, since several teething issues are there. And there are companies who are at the fence, at the boundaries, and just waiting that maybe they have adopted AI but not using it to the full capacity. Since you are the early adopter, Satyam, I think if you can just spread some thoughts on this, any suggestion to the companies who are sitting at the fence?
So for us, it's a big change where we are already seeing almost 20% of our customers using account AA architecture to submit bank statements. So from our point of view, it's at least 1/5 of the problem solved. Okay, and that also saves a lot of money because the multiple other APIs are not to be used. So from that point of view, yes, it's a big thumbs up for the ecosystem, for the consumer. However, we do see there are natural boundaries which has been created because you have to integrate with many AAs, you have to integrate with many TSPs. Each of the banks are not comfortable with one common AAs, and also there's just too much of jigsaw that every time you have to solve for every relationship. But my sense is that this is something which is an early stage and will get solved. The usage is phenomenal, and today I would say that almost like 80% of the bank accounts are populated on A because of, PSUs are there, and then you have all 12 PSUs are there. You have all leading private sector banks, which takes care of most of the requirement, particularly into the urban centers, if you're not dealing with cooperatives or that kind of ecosystems.
Sarup, you want to add?
So the institutions who are thinking about it or sitting on the fence, we observe there are two reasons for it. And one of them is the fact that the data at that point in time was not meeting the requirement in full. These are high intent institutions. It's a matter of time they will come in. I'll give you an example. In the very early days when banking went live, PFM was not fully embracing it yet because it made sense when capital markets data also came in. But the moment equities mutual fund data went live, we are seeing a high degree of interest in PFM apps or PFM offerings from banks to embrace AA. So I think similarly in corporate or joint accounts, etc. The second category that we have seen is usually where there is a gap in awareness. And that is where it may be a slightly longish discussion cycles where we have to talk about two broad factors. One is the capabilities of A. The awareness may not be there in the capabilities of A. One most common example is the fact that there is a recurring fetch possible and what kind of use cases it can power. The other awareness is what is the ecosystem doing, where the Samati website, etc., the consents growth, all those factors will help. And once they are convinced what the ecosystem is doing and the capabilities of the features of A, they come on board. So I think that's what is happening, and it's a matter of time when it becomes the norm for data gathering.
Great. Now, I think we can open up for questions. If anyone has any query, we can answer. Yeah.
My name is Amit Khanzode. I represent Simple CRM, it's an enterprise CRM applications space company. My question to the panel is that one of the use cases which we are thinking and we are looking at it, can account aggregation basically. So what happens is that a typical support center side of it, when the call lands onto a customer support side, he can look at the customer relationship with respect to particular one organization as of now, be it a number of products within one particular organization. But as an account aggregator, will he be able to see the data across the organizations? And can he use it for a cross-sell or upsell or taking certain calls as a part of a call center? Is it legally allowed, or is that possibility from a CRM application perspective?
So anybody want to take this?
So I'll break that into two parts. The first part is the consent part. As long as the customer has given a consent for a valid use case, be it a personal finance use case or a wealth management kind of a use case, where a full 360 that you're referring to, as long as the consent is given, the data can be aggregated. And the usage of that data also is clearly stated in that consent. As long as the consent is valid, whether that data gets used for a end user facing functionality or does it get used for an enterprise user facing functionality, like an RM who assists the end user in the wealth space or the call center folks who assist their customers. As long as the consent is clearly stating that and the data has been shared, it is a possibility. You want to add?
So I just want to add that every consent comes with a purpose binding, and the purpose for which it will be used by the FIU has to be in line with the mandate which that particular FIU has been given. So I just want to add that point. Yeah.
Thank you.
Hi, this is Prashant, founder of Tizori.ai. I was just interested to know, is there any way where startups can have partnerships with Sahmati? Because there are many use cases, but I see FIPs and are basically bigger entities.
So you can volunteer for some of our efforts finding out new use cases, but in terms of getting data via account aggregator, Sahmati is an industry body. We don't have the data, and this data is only, so if you see the framework, FIUs are the registered entities under any of the 5 FSR, with DOR coming as a 5th FSR. So if you have to be a regulated entity to get, if to use account aggregator data.
Sure, thanks. I will connect with you. Thank you.
Thank you. Thanks, man.
Thank you, gentlemen. Please stand together for a photograph, please. Ladies and gentlemen, let's give a huge round of applause to our panelists.